Hello viewers, in this video I'll be going over WTI crude oil, ETF ticker symbol USO. Today we are down 1.3% on the 1 hour chart. We are approaching negative MACD, and on the 4 hour chart, if we expand out, we are seeing a divergence on the MACD, and we may find possible support on the 50 moving average on the 4 hour chart. If we expand out to the daily chart, we found that 50 moving average also coincides with the 9-day moving average, this blue line, as well as the 18-day moving average. So I do find that as our immediate support, which is around the price of $12.05. So let's mark that as our first immediate support. And as for resistance, if we expand out, we found possible past resistance as indicated back in July 11th. That is where we tried to attempt to break out, but we failed to close above that price level. So that resistance is roughly around $12.50, or one could say $12.60. So if we were to move on higher, that price movement is roughly around, it is 2.9% to the upside, and for support, it is roughly 1.1% to the downside. So the forecast model is now available in the link below, so do check it out for WTI crude oil. If you configure the settings, you get all the models that I do not go over with in the video, so do check it out. You get all the forecasts and the models belong with it. So back to the forecast model, I'll go day by day where WTI crude oil will head to the next coming days. So we have 1 day out, 2 days out, 3 days out, 4 days out, 5 days out, 6 days out, and 7 days out. So which one of these models we should focus on? Ideally the model that is best matched to the current trend. Right here we have the current trend, and below is the trend that I believe is the best match. This trend dates back to January 24th to April 20th, 2018. So let me point why these two charts are similar. So what we have in the beginning of the trend, we start off above the middle Bollinger Band, and then we proceeded to break down to touch the bottom Bollinger Band. We see selling price action, and after touching bottom Bollinger Band, we see a good attempt. We average above the middle Bollinger Band for several days, and towards this instance, we touch the upper Bollinger Band twice right towards the end. So we see those instances where we touch the upper Bollinger Bands, and between these two, we see it dip slightly into the middle Bollinger Band right there, and between those. And so we have those points right there. And let's evaluate the trend in question. We see a similar pattern right at the beginning. We start off above the middle Bollinger Band. We see a breakdown to touch the bottom Bollinger Band right here. And if we proceed further on, we average slightly above the middle Bollinger Band, touching the upper Bollinger Band at this instance as well, and one at the very end. And we have two instances where we touch the upper Bollinger Band, and between these two, we revert back to the mean to touch the middle Bollinger Band. So what we have is 1, 2, 3, 4, 5 points. We also have 1, 2, 3, 4, 5 points. So there's reason to believe that the trends and patterns are the same. The outcome and forecast should be fairly the same. So the model that we just evaluated was January 24th to April 20th, 2018. Back then, WTI crude oil was down roughly around 1.1%. So slightly to the downside, we may see prices trade sideways and head a little bit lower. So these models could be distinguished in day-by-day percentages. So what we have here is a day-by-day probability. So if we go for every single day, we see an average slightly above for between 0 and 1.6%. However, we do see that similar action here as well. And we do note that there's no chance or 0% chance of hitting higher above 3.3% to 6%. Overall, there's also a slight chance, a higher probability we may head down lower on the extreme cases around day 4 or day 5. So we do have that probability in hand, and this is how I found the model. If you overlap that with other models, I do find that this trend, the January 24th to April 20th, 2018, was the best match to the current trend. So that is it. This model is now available in the link below, so do check it out. And if you enjoy this content, feel free to like, comment, subscribe, and thank you for watching.